Hi everybody, thanks for tuning in. Want to have a little discussion about a short sale as if you're the seller of the piece of property rather than the buyer. We've got another video that's out that's explaining a little bit of the buyer implications, but this one is more leaning towards the seller. If you're a potential short sale candidate, here's what you need to be aware of. First and foremost, there should be no fee paid up front by you, the seller, to have assistance in the short sale process. You do not need to pay an upfront fee to anyone. If you're asked to pay an upfront fee to help negotiate a short sale for your home, run away. It simply is not necessary. Contact your local realtor. Your realtor, if they're serious about their business and experienced in short sale listings and handling short sales, will already have a team of professionals who work directly with them, and for you to help manage the short sale process with your lender. Essentially, you'll call your realtor, you'll bring them out like any other time, and you'll ask them for help in listing and marketing your home. At that point, of course, you'll tell them, or at some point, you'll tell them that you believe you're a short sale candidate, and likely your realtor will already know that. There's a lot of work that a real estate agent can do before they get to your home that will help identify what potential situation you might be in. We have access to recorded documents at the county office that can show what type of mortgage you closed on, how much it was, and if you closed on a $300,000 mortgage and we're going to your house expecting it to be worth $200,000, we would assume you're a short sale. Anyway, you're meeting with your realtor and you go through the process of establishing a list price. It can be a little tricky. Some realtors believe when listing a short sale, there's an advantage to undervaluing the property, and this will bite you down the road, and I'll explain why in a couple seconds. Treat your house no differently than if you owned it free and clear. You list the home based on recent sale comparables. Your bank's going to expect that you do that. Yes, a short sale takes more time to close. There are more pitfalls and more hang-ups through the transaction. Yes, you may have to offset that a bit by some kind of financial benefit to the buyer who would be willing to wait to purchase your home. Typically a 2%, 3%, a 5% max reduction in potential list price simply to entice the buyer to come to you, that's reasonable. But when an agent expects you to underprice your home dramatically, walk away or ask them to walk away. That's not going to do you any help. You establish a list price based on recent comparable sales, and the process of selling your home is much like any other time. Property gets shown, agents are disclosed that it's a short sale, they're aware of what they're doing, they're aware they're showing a property that needs bank approval. Once an offer comes in from a buyer, there's a number of things that you as the seller are going to need, and your agent are going to need to provide to build a short sale package for your lender to review. The package includes, of course, a sales contract and all appropriate addendums. There needs to be a hardship letter explaining why are we selling our home short of what we owe. You simply can't say, I don't like my home anymore, or I paid too much and I really don't care for this thing anymore. Those aren't hardships. Hardships are loss of job, death of a family member who might have been contributing towards the mortgage, a job transfer. You need to provide bank statements, paycheck stubs, W-2s, recent tax returns. The agent needs to provide a copy of the MLS report showing the property was marketed on the MLS open and freely, photographs of the home, recent comps. All of this gets established into a bank package, and the title company that your realtor has will begin the process of contacting your lender. Now that process is a lengthy one. It can take 2-3 months for everything to get established at the lender and a negotiator to get assigned. Throughout that 2 to 3 month process, the title company or management company who's handling your sale will be making phone calls at least a couple times a week simply to ask if there's a negotiator assigned to the file yet. Now, once a negotiator eventually does get assigned, hopefully your buyer is still there. Sometimes the buyer will have left already. Contractually, they may have had the right to leave in 45, 60 days. Assuming the buyer is still there, now your lender digs into the file. They check it for accuracy and completeness and make sure everything is there. If everything is, they now send out a couple field agents to do what's called a BPO, or a broker price opinion. That BPO will establish where the bank, for the seller, where your bank established it, where they expect to sell the home at. And if the BPOs come in dramatically higher than what your offer may have been for, because your realtor undervalued the property, right then and there the deal's going to die. Because the buyer in good faith may have made a full price offer, but the full price might not have been the correct price, and they're not expecting a counteroffer, and right there the buyer leaves. You've just wasted 2-3 months, and now you have to wait for another buyer. So as I said in the beginning, don't undervalue the property simply to get in line at the bank. That's not going to do you any favors. The BPOs get done assuming that the BPO comes in near the contract price. The seller's lender will issue an acceptance letter, and at that point there's going to be terms that you, the seller, will also have to agree to. Potentially, as the seller, you're going to have to maybe sign a promissory note for the outstanding balance. That's getting less and less common because, frankly, banks are catching on to the fact that buyers aren't going to pay. If you're asked to sign a promissory note, history has shown a buyer will sign the note, and a month or two later they'll go file for bankruptcy anyway, and the bank doesn't get the note that they had them sign anyway. So those are becoming less of a condition of close. What's becoming much more common these days is for the seller to have to actually make a cash contribution at closing. We've seen them as little as $1,000 or $2,000. We've actually heard that there are some in the tens and hundreds of thousands of dollars, of course, depending on the value of your property. So if the seller agrees to the terms that are provided by their lender, and if the buyer is still there and has agreed to the purchase price that they may have offered on, now you're going to have the removal of the bank's cooperation or that contingency, and essentially at that point the transaction becomes much like a normal transaction. Your buyer will have inspections, your buyer will have appraisals done, and for you as the seller at that point it looks a lot like a normal transaction. It's, however, getting to that point that can take 3, 4, 5 months and can be very, very frustrating, especially, again, if for whatever reason your buyer chose to leave based on an opt-out that they may have had built into the contract. This is a very short description of what a seller might have to go through for a short sale attempt. Please contact your local realtor and interview with them and have them explain in great detail the implications to your credit, the implications to how a transaction will unfold and what it might mean. We're obviously available and hope that you'll call us. Please reach out at blog@chenoregroup.com. We can talk about your unique situation and answer any questions that you might have. Once again, thanks for tuning in.